fourth panel for today is focused on private equity investments, where new names may come from. As we discussed earlier today, Ukraine is recovering from a severe banking crisis, and in the time of a shortage of capital, the shortage was filled by the private equities who remained quite active. Assuming the debt financing becomes available in the nearest future, the question is how private equities are set to differentiate. So what are the real advantages of private equity? So we propose or ask to express your opinion on the following question. What advantages does the private equity financing have over debt financing in Ukraine? A, cost of financing, B, terms of financing, C, added value, or then financing, D, no clear advantages. Let's start our voting.
Our opinion doesn't matter. We don't vote.
Your opinion may matter, and we'll see it at the end of the discussion when we will ask the audience to answer this question again. Looks like C is a preferred answer today. So 66% believe that the advantage is added value. I have pleasure to introduce now the moderator of this panel, the principal banker at EBRD, Vladyslav.
Yeah, thank you very much, Anne, for this introduction. It's actually quite interesting results. Obviously, our panelists will have an opportunity to express their opinions on these questions, but it's interesting that almost 20%, or about 20%, decided there is no clear advantages. Financing versus debt. And that's exactly where we wanted to focus our today's discussion, to see whether there are real advantages or not, and what those advantages are. So I would like to present our panelists first. First, the representatives of the firms managing private money. Brian Bass, Managing Director at Dragon Capital. Konstantin Magaletskiy, Partner in Horizon Capital. Alexander Snitsarenko, Director at 4i Capital, and Dirk, Aleven, a company that is seeking financing in Ukraine and not only in Ukraine. And finally, Mykola, Stetsenko, Managing Partner at Avellum, which will present an experienced lawyer view on today's discussion. So, in order to open up the panel, the first question which I would like to address to Alex. It sounds like, other than financing, which benefits the private equity firms may offer to companies in Ukraine?
Thank you. I would like to say thank you to CFA for this opportunity to take part in this panel. I would go through a few practical benefits that private equity in Ukraine provides to Ukrainian companies. They are strategy, human resources, and networking. The first benefit is strategy that we introduced to a portfolio company. As you know, private equity is about making a good investment, and normally in 5 years carrying out an exit. During this 5-year period, the private equity firm would play a role of a coach, and the portfolio company would be preparing for its kind of Olympic Games. The crucial part here is that we, private equity, always make strategy ambitious, but at the same time achievable. And most importantly, be able to live through Ukrainian reality. Better investment climate, regular devaluation of national currency. The next important benefit is human resources. We would find and bring in a new team into portfolio company that would implement the strategy. Now comes the tough part. In Ukraine, we have a limited pool of top managers who are capable of preparing company for an exit. That is why we, private equity people, spend a big part of our time looking for such people in Ukraine. We even become CEOs of our portfolio companies for a transitional period. Another important benefit I would like to point out is networking. And when I say networking, I mean much more than just connections. Private portfolio companies become members of kind of private club of a private equity company, which has certain advantages. First of all, we provide best business expertise, both general and sector-related ones. We normally attract foreign experts, which are top executives with many years of successful experience in the same business field abroad. Secondly, and of course, private equity firm provides portfolio companies with connections, with business leaders, both local and international, with banks, financial institutions, with different services providers. Our portfolio companies became sort of classmates, exchanging insights, sharing information on difficult and sometimes different business environment in Ukraine on a very regular basis. I would say that there are other practical benefits that private equity provides, and I hope my colleagues in the panel will highlight them later.
Okay, thank you for this. And I wanted to address the same question to Dirk. From the perspective of a company that is seeking financing, do you think that the things that Alex outlined are the real reasons for the main benefits, or maybe financing is really the only part, and the company could outsource all of the expertise it needs elsewhere?
I would not take myself serious if I was looking for a network, if I was looking for managerial inputs, if I was looking for strategic decisions and finance. What leaves them up to me as a manager or as an entrepreneur. So I would expect any private equity, first of all, to look for companies to invest in who has this know-how within their own company. And we as a company, we've been developing this, our business in Ukraine, in Georgia, and in Kazakhstan. In Ukraine, we did 100% by our own capital as Dutch entrepreneurs. In Georgia, we co-invested along with Georgian entrepreneurs with a local network. And in Kazakhstan, we're making a deal with a private equity firm. So I can see the differences in that. What really adds, what a private equity really can add is their know-how and experience in financing, and that's more than money alone. That has to do with network, though. That has to do with a strategic view, but it's very specific on making the money work for your company. So, what is the right source of financing? How to structure your finance? And how to also become an attractive company for a potential exit. We're investing in companies here in the region, not for the coming 20 or 40 years. I hope one day I can have a pension in Holland as well. So I guess private equity can definitely contribute to the fact that you're becoming an interesting target for acquisitions in the longer run. And you at least have an option to sell along with private equity after 5 to 10 years.
Well, we have another question for you to ask, but before that, I would like to give an opportunity to Brian to add.
I just would like to add that I think there's one other key element that private equity can bring to the table that hasn't been mentioned yet, and that is credibility. A lot of times a private equity fund could help a company reduce its cost of capital simply by being in the shareholder structure. When Dragon Capital took a private equity investor in 2007, Goldman Sachs, if you guys remember, we took a small investment from Goldman Sachs. We didn't actually need the money per se. We were interested in Goldman Sachs as an investor because we wanted to go through their due diligence process. We wanted to see that our business processes and our structure was properly organized and validate our business plan. And in the process, they helped us by allowing us to go to banks and get cheaper sources of financing because they were in our capital structure. So I think that's something that's a lot of times overlooked, but not least important.
Yeah, thanks, Sven. So Dirk, if you were to go around and look for a firm to engage with, I mean, what sort of characteristics you'd be looking in selecting a partner, a private equity firm to work with?
What we find pretty difficult is the minimum, what they call in private equity terms ticket sizes. That was a term, first of all, I had to understand and learn. But I have noticed that the minimum investments are pretty high for agriculture. That's specific for our industry. We have been talking with several private equity firms in Ukraine as well on raising finance for our further expansion. And the numbers they would prefer to come up as a minimum are definitely flushing the market in year one. So flushing the market was one of the problems. The second one, we don't have the human capital in our region, in Lviv, to operate the company. So on paper it works well. The models were fantastic, offering the yields or the returns that the companies were after, but we couldn't support that strategy of chipping in 5 to 10 million right away and building the company of that scale. So we are maybe too small, too early for private equity. That could be one conclusion. At least that's why we're looking for investors, and we had those experiences in Georgia with those individuals in Georgia, willing to invest 2 million with a future of another 10 million to invest, but developing the business step by step. That's very important for us. First of all, that we find partners who allow us to keep control over the business in the first years, where we feel that the Dutch know-how of managing a greenhouse is crucial. And secondly, allow us to grow the business over time.
Yeah, it's interesting that you bring your experience in Georgia vis-a-vis your experience in Ukraine. So, I mean, we all understand that government relations play a very important role in the former CIS countries. So, from your perspective, in selecting a private equity firm, a strong or very good government relations, how much of a factor in your selection would that be? Again, Georgia vis-a-vis Ukraine.
For Ukraine, we definitely lack currently a partner who has strong ties in the community, let's say, or who offers us the umbrella that we need. So as a result, we're doing everything in the legal ways, and that takes us forever. So our let's say development path is much slower compared to Georgia. In Georgia, we're doing as well everything legally, but then the legal process is taking very little time. We had to wait 6 months to get an import license done for a greenhouse in Ukraine. The same import license took us 10 working days in Georgia. I mean, and we know exactly that it will take no more than 10 days, and it was there, and it was approved. And that's the big difference. So it makes the need for an umbrella even bigger in Ukraine, that's for sure, but also what we understand here.
That's a good point. Mykola, actually, if I could follow up on this one. I mean, from your perspective as a legal advisor to some of the companies, how much do you think having good government relations is a factor in selecting a private equity firm, or maybe there are other factors that you would point out as most critical ones?
Well, honestly, I don't think that this should be a big factor in Ukraine, at least in the mid-term and long-term perspective, the government relations. I think, from our experience in advising on private equity deals, I think the government relations could have been a factor, but it wasn't a major one. And going forward, it should actually go down. Hopefully, our regulations and legislation will be more transparent and easier, so you will not need to have that connection. On the other hand, I think what is important from looking as an outsider, the businessmen, the founders, and the private equity firms is the relationship. They need to get really, they need to get to know each other very well, and to be comfortable to actually deal with each other on a regular basis, and understand that they're helping each other, and that this is like a new venture, true partnership. And I think many Ukrainians don't really understand what a partnership means. And sometimes it's a criticism, sometimes it's going through difficult times, but it's also trying to achieve the common goal. But often, Ukrainian businessmen view private equity not as a partner, but just yet another source of financing, which is not quite so annoying.
Okay, thank you. And switching gears a little bit now, and getting to the main topic of today's discussion is where we're going to see the, what are the hottest investment themes today, where we're going to see the investment opportunities tomorrow, and I would like to address this question first to Konstantin Magaletskiy.
So from our point of view, the best opportunities in terms of investments, where our focus is, because like, we don't focus on all industries which are promising. For example, like real estate is very interesting, but it's not at the very top of our priorities, but it's much more important for other funds. It doesn't mean that it's not attractive, it just means that we don't have much experience in real estate. So what is of interest for us and what we believe is the most promising is first of all IT. And now we are probably the largest financial investor in Ukraine in IT by value. So we have several investments, some of them we exited already, like Cycle, when we sold our stake to Sorum. In some of them, like Google or Rosetto or some others, we are still an investor. So we see a lot of opportunities there, especially taking into account that, and that's in line with what Alexander said, that we can actually bring a lot of value add to the table. Because we have experience of investing in a lot of companies and helping them to grow, not only Ukraine, but globally. And second, we have our internal expertise with some of investment professionals have experience of creating, launching, and successfully developing multi-million-dollar global companies as entrepreneurs. So we believe that provides also us a lot of opportunities both for us and the companies in the sector which are getting money. And apart of IT, we actually are big believers in pharmaceuticals, where again they have a very successful investment case, biopharma, and they would like to make more investment in this sector, either directly as Horizon or via biopharma. Agriculture, food processing, because I mean, obviously Ukraine has already very impressive results in this sector and will achieve much more, in our opinion. And basically now, a lot of industries which have export potential, in our opinion, have a lot of investment attractiveness inside, because Ukraine is exporting still not that much as it can, as a result of potential, and we believe like there are some points at which you can invest and help the companies to grow their export, especially to European Union and others markets where Ukrainian companies don't have much experience. And we as a fund have experience of when one of our portfolio companies had at some point had EBITDA close to zero, and in the near term it will be like $10 million, even actually more than $10 million, thanks to the growth in the European market. And we actually provided a lot of value and help to this company to achieve such impressive results. We are looking for more partners into whom we can invest together, because we buy not only majority stakes, but minority stakes and help entrepreneurs to grow. So that's basically what I would do.
If you were to make a guess, what would be the probably largest investment theme in private equity over the next 5 to 7 years? What would your selection be? Is it still agriculture, or maybe, you know, given the Ukrainian comparative advantages, the manufacturing will take off, especially with the European markets opening up? Or maybe something in IT that we're not aware of?
Well, of course, like the broad answer would be overall export-oriented industries or industries with potential. More specific answer would be, I think IT and agriculture would be comparable. It all depends, like, from legislative changes, because like there is still no land market in Ukraine, and as much as investors would like to see this market open for billions of dollars in Ukraine to come, there is no certainty on this issue, unfortunately. Should the land market open, then there will be like, agriculture will be getting more investment than all other industries combined, right? Even now, if we combine agriculture and infrastructure, because like infrastructure is all often for agriculture, like if we took into account this Keith and Cargill project for $100 million, and I believe actually EBRD is also will be part of this project, right, from the open source. So such cases, they provide like a huge potential for this industry, Bungie in Mykola. So of course it's much more than IT. But for financial investors, I think it would be comparable. Despite the size of the IT industry, is way much less than agriculture. IT in Ukraine is several $billion per year, right, in terms of revenues. And agriculture, only export is like 13 or $14 billion, right? So, but they will be comparable. But that's like the two biggest topics by far. And if you look like at the recent years, IT is actually quite comparable to agriculture. If you look at luxury in Odessa, which is like by some estimates $150 million, right? If you look Maximizer in Dnipropetrovsk, which was acquired by Oracle again, around $150 million. That's actually quite an impressive amount.
And Alex, I mean, which industries are you looking at? I mean, where do you see, from your firm's perspective, the new themes to come from? Where are you looking at?
If we're talking about local private equity firms, and all three are present here, I would say that apart from IT and pharma, and we are present in IT and pharma as well, I would say that we will be looking for service sector in general. We will be still picky, no matter what will be with the economy of Ukraine, because Ukraine is very difficult business environment, and we should be picky all the time. And I think we'll be looking for great Ukrainian stories in business, in many sectors. And of course, we'll be looking for business segments where we have big entry barriers. It's very important. And agriculture, for example, it's more commodity than normal, regular business, and difficult for us, for Ukrainian private equity companies to invest in commodities. Agriculture will be covered, I think, by global private equity. Maybe sometimes we will open our borders, investment climate will become much better, and we'll see this inflow of global private equity money. But if we're talking about local private equity firms, we will be looking for successful Ukrainian stories in different sectors in Ukraine.
Brian, what do you think?
I tend to agree with what my colleagues have said for the most part. We'll definitely see an increase in investments in IT and high tech. It's a hot sector for Ukraine, and it's a sector where Ukraine can compete globally. So that's certainly one that we expect to see many more deals in the next 5 years. Ukraine is an agricultural country, so we fully expect that agribusiness will continue to attract investors, probably forever. There's so much to do in this country to build and continue building the agribusiness sphere, and that is quite a bit of investment. Two areas that were not mentioned are infrastructure. And infrastructure is one that Ukraine is unfortunately far behind and will require quite a bit of investment. Unfortunately, the funds that are active today in Ukraine are not of the size that can really participate heavily in a infrastructure type project. So Ukraine will need to continue its reform efforts and improve its general attractiveness in order to attract those bigger funds that can fund large-scale infrastructure type projects. I also agree with export-oriented industries, and I would love to see something happen in manufacturing, light manufacturing, with more of a target of exporting to the European Union, because there's such an opportunity for that in this country. Moving up the value chain as much as possible and creating value for investors. But I think the reason why most private equity firms are looking at export-oriented sectors right now are simply because we felt the pain of the 60% devaluation in recent years, and that wipes off a considerable amount of your investment gain. So, if you're still feeling that pain, you want to look at those sectors that are export-oriented. It's a natural hedge to your investment.
Right. Thank you. We all know that that the saying when once the private equity enters, it's already looking for the exit, and it's absolutely true. We know that over the past few years, the access to public markets for Ukrainian companies has deteriorated a lot, and now the question becomes, once the private equity firms discuss the exit options with the companies, what could they offer, or which conclusions do they reach? If you could comment on this point as well.
Yeah, I think private equity firms should approach this topic with their portfolio companies very carefully. Of course, every private equity firm out there in the world globally always thinks about exit first. How are they going to get out of this investment in 5, 7 years, or whatever their time horizon is? And generally speaking, there are only a handful of exit strategies out there. They've been around for years, and those are trade sale, strategic sale, repurchase, flotation, IPO, involuntary sale, or maybe even leverage recapitalization of the business. I mean, those are generally the 5 or 6 options that firms have, and on those you have a lot more detail that you can get into in terms of options of various sorts. But generally, those are the ones that private equity firms and companies need to be focused on. But in Ukraine, because of the situation that we find ourselves in today, it's very, very difficult to predict with any degree of certainty where the markets are going to be in 5 years' time. It's just too difficult to estimate. So, building an exit strategy into your deal that is based on an IPO is a highly risky proposition. And that's, I think, one of the reasons why funds like ours are focusing on controlling stakes, because you tend, even though we don't necessarily believe that we should be the ones running the business, and we don't intend to, there's management in place and a partner in place to continue running the business, but you take a lot of that risk of exit out if you have control, because at the end of the day, you make that final decision and be able to enforce it if you have to. But generally, Ukrainian companies, and especially private equity firms, in my view, need to be spending a lot more time talking about exit from the very beginning. I think Mykola's point was actually spot on. That relationship is founded and based on the strategy that you develop together as a team, investor and investee. And so many times we see that the strategy changes over a period of 5 years and disagreements arise, and it's better if that relationship is well founded from the very beginning. So my conclusion is that spend more time on exit. Obviously give yourself as much option as you possibly can early on, and give yourself control over that exit.
Thank you, but could I ask you a direct question? Does your firm absolutely require a put option on your stake or not?
Well, first of all, I'm not in our private equity fund, so I'm not going to speak for what their requirements are. I mean, I run the investment banking side of the business, so. But I would say, probably not, because again, it's every private equity deal is so unique that you have to craft a strategy for each particular deal. So requiring any one particular strategy for any given deal, I think, is a mistake, and I'm sure that we're not making that mistake.
Okay. So once your investment inside, then coming back to the IPO option, what in your view the company should look like in order to be able to be attractive in any of the exchanges? You could comment on Warsaw, on London, on any other exchange. I mean, if IPO was an option, how this company would look like in today's terms?
Big. I think that that's the first short answer.
What's the smallest?
I think we made a big mistake. All of us in this industry in 2005 through 2008, when we were listing. There were technical listings of these smallish, medium-sized companies in Ukraine, and listing a free float of $30, $40 million, $50 million. It's not enough liquidity. It dries up very quickly, and everybody, in the end of the day, suffers from that, except maybe the owners of the business who got the money and did something with it that may be counterproductive to what the investors wanted to do. But nonetheless, I mean, those markets dried up very fast, and when they did, unfortunately, a lot of people ended up with shares that couldn't trade. So size is really important. I would say that I wouldn't go to the markets today, the equity markets, with less than $100, $150 million of free float. So if you are planning to IPO a business 25, 30, 40%, you're going to need a sizable market cap. There are not that many companies in Ukraine today that are sizable enough to really be able to tap an international market. And unfortunately for Ukraine, there's no local market per se. It's a tragedy, really, and I hope that as part of these reform processes, we can establish and build a local equities market for smaller companies to tap into.
Okay, so my question is, I'm an agricultural company wanting to maybe attract $30, $40 million to Warsaw Stock Exchange. Do I have a chance or not, in your view?
No.
And does it relate to the legacy of previous IPOs, because we know cases when it actually happened?
I think partially yes. There's still quite a bit of Ukraine fatigue amongst Western investors, particularly in Warsaw. There are quite a few deals that listed in Warsaw that didn't take off. There are a few great success stories there that are still actively traded, but for the most part, there were a lot of failures. And as a result, I don't think that Polish investors are eager to invest in Ukraine. And not to mention, you have to remember that the pension system in Poland changed, and that completely changed the demand for Ukrainian assets. There was a time when we had a captive audience of investors because pension funds were forced to invest a certain percentage of their capital in foreign IPOs. So we had there's money needed to find investments, so all we had to do is bring product. Today that doesn't exist. They changed the policy, and so you have to win that investment on the investment's merit itself and not on the fact that there's a captive need.
Okay, so we hear that if you're a small or medium enterprise, that you essentially have no options of going and doing an IPO nowadays. So, Konstantin, the question to you, does your firm require absolutely a put option when you invest?
The answer is it depends.
Okay.
But joke aside, I think for private equity companies in our region, rights like drug alone are much more important than the put option, because drug alone allows you to sell together the whole company. Because usually when you say put, it means one of the shareholders can force another shareholder to buy their stake, right? And in Ukraine, in most cases, even if you have the put, how you can enforce it to local entrepreneur who doesn't have much liquidity, right? So food is a great option, but overall, like for private equities, and especially like I doubt that Dragon, which is usually taking only majority stakes, can have a food to the minority shareholder, who by definition is unlikely to buy a much bigger stake. So the answer is like drug alone is much more important.
Okay, makes sense. Thank you for this. So we also would like to maybe give more time to talk about the current state of the private equity market and what could be or should be done in Ukraine to improve the situation in the market. And I would like to address this question to Mykola.
Well, thank you. When I was thinking about this question, I'd like to kind of walk you through my thinking. I'm a lawyer, so you're asking from the legal perspective what needs to be done. Because we all understand that there are also some economic risks and uncertainty that prevent the investment. So, trying to focus on the legal aspects, I tried first to focus what has been already done. And it appears that a lot has been done. So I might sound like not one of those very skeptical lawyers, forgive me for this. We have, over the last 2.5 years, tremendous transparency in the system. Also some public registers, in terms of ownership to companies, ownership of land, ownership of property. So this is a big achievement in my view. We have the court reform fund, judicial reform fund finally kicked off. It just started, so we need to be patient with this. A lot of deregulation has already been done. Of course, a lot needs to be done more, but still, quite a few certificates, registers, permits, and licenses have been abolished. We have an improved situation with the antitrust competition approvals. We finally have a Prozor actually working, so all the sorts of public procurement processes are more, definitely much more transparent, as the name suggests. Taxes, we are working on that, but admittedly, let's admit, we have a more stable tax system and slightly more predictable. Of course, there's lots to be done here. And the currency control. We all complain about the temporary control restrictions, but again, on the bright side, some of them have been lifted. The dividends flow is now permitted to a certain extent, so things are improving in that respect. Now, what you would probably expect from me as a lawyer to say, oh, what do we need to do? We need to do the full currency control liberalization, we need privatization, more court judicial reform, and maybe some of you heard me speaking, we are actively as a firm, and I'm a member of the Ukrainian Bar Association. We are pushing for the corporate law reform, in particular for the shareholder agreements to be available on the market, and the new law on the limited liability companies. All of that is important, but let's realistically look at this. Is it really important for the private equity? Privatization, currency control, corporate law reform? Well, admittedly, this is more for the strategic investors. From my experience, and esteemed colleagues, correct me if I'm wrong, but you don't really look for dividends when you invest in companies. You really look into the appreciation of value of the company and then to sell. And admittedly, even if the corporate law reform happens, we are realistic that we will set the stage for future investments to be structured in Ukraine probably in 10 or 20 years. But we need to do it. But nonetheless, in the next few years, all of the structuring will still be happening at the foreign level. So that is also not important. So as I was thinking about this, what do we really need to do and focus on? I came to the conclusion that what Brian already mentioned is that we need to focus on the exit. We, at the moment, are talking about Warsaw Stock Exchange and potentially even London, but these are not realistic options, and they have never been really realistic options, even in very good times. We really needed to have a very big company to access Warsaw, not to mention London. What we need is the alternative here. And of course, if you have a good strategic investor coming to buy the whole company, great. But again, that may happen, may not. You need an alternative, and that is a local, developed local market, stock market in Ukraine. In various discussions with the regulator, with the Securities and Exchange Commission of Ukraine, we have touched upon this, and I know that they are thinking about doing something dramatic there to at least prepare the stage for future IPOs in Ukraine. What is happening right now, what I call this, is that we're moving towards a singularity moment, in a way, when the current stock market will basically die. It will become to zero. Maybe it's already there. And many market participants are asking, well, what's then? And you're killing the market, we need to sustain at least something. I think the regulator in that respect is doing the right thing. They are prepared, they are cleaning the stage and creating absolutely new rules so that in 3 or 5 years, we will have a better system from the corporate governance perspective, from the infrastructure perspective, market infrastructure perspective, to be prepared to actually have the first Ukrainian IPO, be it Nova Poshta that everyone's talking about, or any other company in the IT or pharma sector that will dare to access the market at least for a small 20% stake. So I think we need really the private equity community that is thinking about investing now, and of course thinking about the exit in 5 or 7 years, already need to focus on that and also support that idea that we need a new start for the Ukrainian stock market. That's my view, what needs to be done.
Okay, and then in terms of, you touched on doing structuring abroad. If I am a private equity firm wanting to make an investment with the staying there for maybe the next 7 years, 7 to 10 years, what would you recommend? Still doing the English law and offshore structure, or maybe at some point it makes more sense to apply the Ukrainian law and play by the Ukrainian law rules? I mean, what would you recommend, and where you see the trends going?
Unfortunately, I must recommend that you stick to the old realities. As a Ukrainian lawyer and Ukrainian patriot, I wish we had all these instruments in Ukraine, and we were structuring all of these agreements and relationships under Ukrainian law. And as I mentioned, we as a legal community are working on bringing these instruments to Ukraine, but it will take time. Even if they are adopted and they are perfectly written out by the parliament, it will take some time before the court practice will appear, and we will see how it plays out in reality. What I was slightly correct when you say offshore structures. I think this is now like a bad word, offshore. In reality, Cyprus is not offshore. It's
but I understand, please.
Cyprus is part of the European Union. Many companies now do the holding structures in the Netherlands. This is not offshore in reality, and yes, most likely for proper structuring of the partnership relations between the founding shareholders and the private equity firm, you would probably need, unfortunately, to go still to a foreign level and use the English law instruments. That's the reality. Ukrainian, I mean, in theory, we can try to find some clauses in Ukrainian legislation that would probably resemble some of the ideas of English law, but in reality, I doubt that any Ukrainian client, any private equity firm, wants to be the first pioneer to test the Ukrainian court system from that angle.
Okay. My question is, we probably all signed a number of non-disclosure agreements in our lifetime, but I personally do not know a single time when it was enforced anywhere in courts. So my question is, when you sign something with a Ukrainian company according to the English law, I mean, what are the prospects of enforcing this in Ukraine? I mean, how widespread is the practice?
Well, I don't think the practice is widespread, as you mentioned, but is it a matter of...
There was a very famous case in real estate in shopping mall in Mykola and
well, yeah, our firm used to work on that, but that's not even, but that wasn't so much about the non-disclosure, it was more than that. But are you really looking, if you really focus on the non-disclosure, are you really looking to, by having your counterparty sign it, Are you looking, you expect to get the compensation of damages? Or you really want the party to deter the party, to stop them from reaching this simply by the threat that potentially such court litigation may occur? I think that's the second. That's why that in reality not so many court cases have been in Ukraine and abroad actually for non-disclosure. This is more deterrent. Yeah, but in terms of enforcement, I mean, yes, you can do enforcement. It will take time, like in any country, by the way. It takes time. It doesn't take 2 months. It takes roughly a year. But if you have a proper arbitral award issued by a foreign arbitration tribunal, yes, you can enforce it. Again, it will take time. But let's be realistic. We're not that different in terms of enforcement from other jurisdictions.
So with this, maybe we pass word to Anne.
Thank you. Vladyslav, let's repeat our voting, our final voting for the panel sessions today. So let me remind you the question. The question was, what advantages does the private equity financing have over debt financing in Ukraine? And the proposed answers are A, cost of financing, B, terms of financing, C, added value other than financing, D, no clear advantages. Gentlemen, I would like to thank you. You've done a great job. Actually, we have now definite 82% voting for C, suggesting that now it is more. There are more advantages clearly seen in terms of private equity. So thank you.
Thank you. Thank you, everyone.
In addition to our, so this is our final panel for today, but that's not the end. Please stay with us. In addition to our standard program and panel discussions, we have prepared some novinka, surprise for you. This year we offer you to participate in the talk competition, Future of Finance Talks, which takes inspiration from the famous TEDx series, where presenters make a short performance, demonstration, speech, which foster learning and inspiration. We have asked our society members if they have some innovative, inspiring, creative, insightful material about investment profession that they would like to deliver to a wider audience. So this year, speakers are Tengiz Tkeshilashvili with the topic Going Beyond the Simple Robo-Advising, Ilya Porkalov, Ethereum, the DAO fiasco and its implications, and Alexander Shvachko with the mysterious U. I will ask now for help to remove the tables and chairs from the stage, so we have a clear stage for presenters. And also would invite presenters to pick up the mics, the equipment, so you can do your talk. Also, I will explain the rules. Each speaker will be given 6 minutes for the talk. In 5 minutes, our volunteer will show a sign, 1 minute remaining, and in 6 minutes, the mic will go off. After 3 speakers present their speeches, you will be asked to vote again, and to decide whose speech was most influencing, powerful, and is inspiring. Please vote wisely. Your vote will have some value, some high value, because the winner of the talk competition will receive a special prize. a free participation in the global networking event in the investment profession, the 70th annual CFA conference in Philadelphia. So let's give a round of encouraging applause to our speakers. So Tengiz will be the first presenter. Tengiz, please pick up your mic. Then we'll have Ilya and Alexander.